We need to talk crypto. No, seriously. I know we've been talking about it here on the week ahead video, but this week ahead video, we really need to talk about it. Hey traders, my name is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video, and I'm so glad to have you here. Yeah, we're going to discuss crypto because crypto has been leading the charge the last couple of weeks. I know we've been talking about it every week here on the week ahead video, but we're getting to some really big levels that we need to pay attention to, and I think the market's paying attention to them as well. We're going to talk about other things as well, like what's happening with the yen, JGBs, the Japanese budget that was released overnight. Also, the dollar. It's really threatening a big breakout, and that's something that has to have your attention. So make sure you stick around for that. And then obviously, I'm going to talk a little bit about NVIDIA and the price action that we saw 2 days ago. Is it yesterday? Yesterday, even though earnings were 2 days ago, this is Friday. I'm filming Friday, November 21st, but yesterday's price action and Wednesday's earnings. So we got a lot to discuss today. One of the other things that I wanted to mention too is, trader funding program. We do have our 30% off. It's our Thanksgiving back to you sale. It's going on from November 20th, that was yesterday, all the way to December 2nd. So you'll get a 30% off on instant funding and also one-step assessments. I'll talk about that a little bit later, but let's get into the week ahead video. Let's talk about some of the things that have been moving. We'll be moving the market this next week. But I really want to start. I want to start and talking about crypto because crypto is such a big deal. And then we're going to go into the earnings, into what's happening this next week. And then what we're going to do is we're going to go into other markets. Nick from Trading Analytics is joining us. So we got a lot to cover. So let's get to it. All right. So I'm going to pull up the week ahead charts, the charts that I always like to draw on, and let's talk about what's happening in Bitcoin and what's happening in Ethereum. Now, I know I've been discussing this move lower in Bitcoin, drawing it out for you. Well, guess what? We have hit today we pretty much hit, or did hit actually, within $100, the 88% retracement of this last move higher. Now, I want to focus your attention on the fact that this 70,000 level and that 75,000 level, this whole area is major support for Bitcoin. Now, it's not just Bitcoin, it's Ethereum, it's other assets too. I want to take a look at Bitcoin or Ethereum. I'm going to leave this chart up here just because I want you guys to kind of focus on what I'm saying. Because this is something that we've talked about on our private shows. Remember, if you're in ForexAnalytix and you're in our community, you get involved in our private shows, not just our public ones, which is the Phase show and the Flow show, but we have the daily roundup, we have the morning edge, and I've had this discussion many times over the last couple of weeks, and I think now is the time that we really need to discuss it here in this forum. Okay. When you're talking about crypto, and the reason why there's that big circle up there in Ethereum, we were talking about it last week, I believe, or maybe 2 weeks ago, because I said short Bitcoin at 104, 105,000. You remember that was actually from 2 weeks ago, the week ahead video. Anyway, we're down at levels that are pretty scary, but I circled that Ethereum up in the 4,000. 4,200 level, because that's where a lot of institutional traders have been getting long and really adopting crypto into their portfolios. Well, the problem is if you think about like the drop that we've seen here, which has been nearly 40%, which is over 43% from the midpoint and around that area, but roughly give or take, 30%, 40%, whatever you're down, right? If you're an institutional client, you're probably taking a look around going, oh my gosh, do I continue to hold this stuff, that I just put in our portfolio? I allocated 2-3% in our portfolio, or do I hang on to my gold, or do I hang on to my Microsoft or Google, or, this is why crypto has been liquidated, in my opinion, because we've seen enough risk aversion just from this week where you're starting to see some of the late adopters or late to the party investors have really been liquidating these positions, whether it's been Bitcoin or Ethereum. You have to hit the bid and sell something that you own if you want to retain other stuff. And like the other things that I think people are holding on to are like gold and silver, and we've talked a lot about gold and silver. There's gold, here's silver, and I'm going to talk about that a little bit later, so don't worry, because one of these was our trade setup from last week, so I'm going to get back into it. But you can see how really you've seen crypto break ranks from gold and silver. And I believe that's because if you're looking at two assets and you go, okay, I need to sell one, what are you going to hang on to? Well, you're probably going to hang on to the one that has been working for you for years, that you've had in your portfolio for years, whether it's silver or gold, and you're probably liquidating, your Bitcoin, crypto, Ethereum, Solana, Cardano, whatever it is that you own there, you're probably liquidating it and keeping some of your other assets. So that's what I think is happening in crypto. Now, the issue would be is if Bitcoin starts breaking below that 70 to 75,000 level. That is where things are going to get very ugly, not only for the crypto market, but also for risk. And that's something that I think everybody needs to be paying attention to. Now, speaking of one of the other topics that I wanted to bring up before I go into what's happening this next week is I want to talk about the dollar. If you look at the dollar index is threatening a big breakout. Now, if you guys aren't paying attention to this, well, we've talked about this is the range. This is the range breakout. We're spending now our third day above the 200 DMA. That's the third day since back in March. You can see the last time we were above the 200 DMA was back here in March. So the dollar looks really bullish, and we have this rising channel. You have this range extension in case it starts to move. You get a double bottom breakout. I was saying this on social media a little bit earlier and on Twitter. If you guys follow me on Twitter, you probably saw this or you might have seen it. There's nothing that changes expectations more than price. So if you're an analyst that's been targeting 120 for the euro for the end of the year, going in, your forecast into 2026, if the euro trades down to 112, your forecasts are going to change. I mean, there's nothing to really, you can try to sit there and say, no, we're really the euro's really going to 120 when it drops down to 110 or 112. But you're going to see forecasts really shift if the dollar index breaks out and the euro breaks below the 114 level. So keep that in mind, because the dollar rally usually coincides with whether it's a liquidity crisis, it's a flight to safety, whatever you want to call it. The dollar index breaking out to the upside would be pretty vicious for the markets, and it may have repercussions that we'll be seen in other markets. And some of the currencies that are really moving are commodity currencies. You look at the dollar Canadian. We've been talking about it building a big base, and it still has a lot of room to reach its target, of this triangle. We're just climbing up towards these highs. You look at the US dollar Norwegian kronas, build a nice base, false breakdown. You can see right here. False breakdowns usually lead to, well, most of you know exactly what I'm going to say here. False breakdowns lead to breakouts. And so in this case, you have this false breakdown in the US dollar Norwegian krona that tends to lead to an upside break. Then you look at, currencies like the Aussie. I've talked a lot about the Aussie dollar. Here on the week ahead video, I talk about it almost daily I do talk about it daily on our shows. And the message is still the same. The same as it was last week. Last week I did talk about this, and it's still the same as the week before and the week before that. If you have assets near all-time highs, like stocks, you have gold at all-time highs, yet you have an Aussie that is underperforming. What happens when stocks become vulnerable? Well, what we've seen this week is we've seen, the S&P threaten to the downside. It's the blue line, right? You see the S&P finally threatened to the downside. What did Aussie do? The Aussie broke lower. Now you'll notice we are trading right now, and let me get rid of this. We are trading right back at our 200 DMA, but we are below the 200 DMA. We closed below it yesterday, and we're probably going to close below it again today. That is a risk for the Aussie dollar. The Aussie is now at risk at a much bigger decline. Next week, we do have Aussie CPI, so that's coming out actually on Tuesday night or Wednesday morning in Australia, but we also have the RBNZ rate decision. So you have things that could turn the Aussie lower, so keep that on your radar, especially when we're talking about commodity currencies, because The things that get sold if stocks go down tend in the FX market tend to be commodity currencies and emerging market currencies. So keep that in mind as we move into this next week. And then the last thing I want to talk about just before we go into the calendar is NVIDIA earnings. And I know Nick's probably going to talk a lot about NVIDIA, but NVIDIA is really flirting with this 180 level. It's been kind of above and below it all day today. But the problem with NVIDIA is we had a sell-off as soon as the earnings came out. So the earnings, we had an earnings beat. NVIDIA spiked up. And as soon as the market opened yesterday, on Thursday, it started selling off. And we sold off from, this is the 618 retracement. You can see it right here. Let me delete this. Oops, wrong thing. Let's delete this longer term one. Okay, you can see we rejected basically the 618 retracement of this move, right? Really damn close, really close to 618, and then we just failed. The problem with NVIDIA is the market for all intents and purposes. So if NVIDIA is selling off, there's a good chance that the S&P is going to sell off. So you got to watch NVIDIA because we are now starting to get comfortable below this previous rising trend line. We're getting comfortable. It's Friday. There's a couple more hours left in the market open, but reality is, NVIDIA is probably, going to be around these levels because anybody who is long is scared and no one wants to really short because it's NVIDIA. But, the longer we stay below this trend line, this broken trend line, this blue one, the more at risk we are for a move down to the mid 160s, which in my opinion is the most important support for NVIDIA moving forward is that level. We start breaking below 164, and that is going to be a very bearish event for NVIDIA. So the reason why you see all these lines here, because I was talking about it this week, just because NVIDIA beat earnings doesn't mean that NVIDIA is going to look good a couple of days later. And this is what happened. We had NVIDIA beat earnings, stock started higher, and then it broke down. And that's, been, what we've seen the last several earnings plays that we've seen in NVIDIA. NVIDIA spikes up, then it goes down, spikes up, then goes down, spikes up, then goes down, spikes up, then goes down. We had the same thing happen just here. Let's grab that line. Let me duplicate that, clone that. Oops, clone that here. There we go. We had that same event happen just this week as well. So the problem that we have is if NVIDIA continues to sell off, then that's going to be problematic for the rest of the equity markets. Okay, so what's going on this next week? Now, if you're on ForexAnalytix, you can follow along right over here to the calendar next to the Live Squawk feed.
Webinar
you have the calendar over here if you want. You can adjust it, but I'm just going to go over a few things. So on Tuesday, on my calendar, I have we have core CPI or PPI that's coming out. Now the PPI reading, I'm not sure if it is a September reading or if it's the most current reading. I'm unclear of that, but we should be paying attention to what happens on Tuesday. Like I said, on Tuesday afternoon or Wednesday morning, we have Australian CPI. Now, I was just showing you guys the Aussie dollar, but once again, I think the Aussie is at a bit of a risk here. That we test like this 38% retracement. We start getting below these levels, and this is where things are going to get a little bit dicey for the Aussie. We start breaking below 64.15. That's going to be a pretty bearish event for the Aussie. Then, you're starting to talk, your 38% retracements there, then a 50% retracement, and so on and so forth. And I think there are risks now that the Aussie trades into the low 60-cent level, especially if stocks continue to show some signs of weakness. Now, moving right along, we have New Zealand. We have the New Zealand rate decision. The RBNZ is expected to keep rates unchanged. As you can see, the last time we talked about the Kiwi, we broke out of the wedge. We had limited follow through, and then we rolled over. And here's the problem with the Kiwi is we are nearing the 88% retracement and obviously some really critical support down here. Now, you have to imagine this. Everybody knows that the RBNZ is going to cut rates. So the question will be, how do they guide the market from here? And you can see I would say we're in a descending wedge, and a descending wedge, once again, that is a recipe for an upside breakout, but that doesn't mean it has to. I always like to tell you when you look at a wedge like this, there's probably a 60% chance that we break to the upside, 40% chance that we break to the downside, or 35, 65, something like that. That means there is still a chance we break lower. And if we break lower, then we're going to be challenging all sorts of support down here, which I believe is extremely important for bulls to hold, because you start looking at longer term, what could happen if the Kiwi really breaks down. There's not a lot of support for the Kiwi dollar down here. We're gonna start seeing levels that I haven't personally seen since the early 2000s, which, if you guys don't remember the early 2000s, it'd be right over here. Actually, you know what? It's even lower than that. Hold on. Let me do it this way. I'll do it with their data feed goes way back. So, I mean, we haven't seen these levels in New Zealand dollar. I mean, when I talk about early 2000s, I'm talking about way back here. These levels are all possible. When you're talking about the Aussie, you're talking about the Kiwi. Again, both of them have not rallied with risk. So what happens when risk turns sour? Don't forget, the S&P is not very far from its all-time highs. Not very far at all. How about if we have the garden variety, 10 to 12 to 15% pullback? What happens with commodity currencies, as I mentioned earlier, like the Kiwi? All right, moving right along. UK. So the UK, we do have the budget coming, and I've talked a lot about the Kiwi, about just being a little sideways here, and I think everybody's waiting for the budget, and so the budget's going to give us a pretty directional move, and I don't think much has changed here. We did, however, I want to say this: we had this really tight consolidation. You guys would know it if you follow along ForexAnalytix. Let me just show you, because we talk about this stuff all week long. You go to the basic technical analysis, go to a 4-hour chart. You can see this is the bearish breakdown. We were looking at it all week. A lot of people were shorting it on the way down. And again, if you weren't there, or you're not a ForexAnalytix subscriber, you missed out on that potential short move. The problem with sterling right now is it's still trading really heavy. The budget could change everything, obviously. So we need to keep an eye on that. But because I do think that sterling could get some massive volatility if the budget comes in, and the market just is not happy with it. And what Chancellor Reeves, did I say that correctly, has done, we could very easily be trading down here at 127. Flip side is, we get a break above 132 and change. We're above the 200 DMA. Then we're going to see a recovery. But let me just remind you that if you hadn't seen it, let me just reiterate, the dollar index should be on your radar, because sterling does follow the dollar index to a certain degree, because it is 13% of the dollar index, if I got that number correctly. You can jump in the comments below if it's 13% roughly, or is it 8%? I can't remember. One of those two numbers. Anyway, you can jump down in the comments below and let me know. Correct me, because why not? Anyway, but keep an eye on that as far as sterling goes. One of the other things that we should be paying attention to this week is we have U.S. preliminary GDP, which I think that's going to be fairly new number for us. The preliminary numbers. Again, we just reopened the government, so I might be wrong with that. But keep an eye on the dollar index. And at the very end of the week, we have the dollar CAD. And I briefly mentioned the dollar CAD. We have Canadian GDP on Friday. And you got to watch the dollar CAD, because if the dollar CAD takes out this resistance here, let me just clear this up. And let me just show you what I'm looking at here. You have a rising channel right here. Let me put that in a different color scheme for you guys. I'll make it black. All right. So if you get a breakout to the upside here in the dollar CAD, you're looking at, a possible move to 142, which, you got the 141.80 level as the 127% extension, and further, resistance would be 142, 142 and a quarter, somewhere up in this neighborhood. That's entirely possible, especially if the Canadian GDP comes in worse than expected, or you get some risk aversion in equities. So one of the other things that I should mention, this week we do have some Norway data. We have some Mexican data. We have Mexican mid-month CPI on Monday. On Friday we have Mexican employment. But Friday we actually have Norway's employment, and we have Norway GDP on Wednesday morning. Now take a look at the US dollar Norwegian krona, because as I was just discussing, if you get a breakout above this resistance, like that means that Norway's data was weaker than expected. You're talking about a range extension that takes us back to the 78% retracement of that. That's just that most recent move. You can actually go that a little bit further out here. So we're talking about a move that takes us close to these previous lows from way back here in November of last year. So the risk of an upside break in the US dollar Norwegian krona seems quite possible. If you go into our chat room and you go into the news and research room, one of our Norwegian traders in our chat room posted some analysis on Norway, I believe yesterday. Yeah, Geard put some. This is from Nordea, and you can get this in our chat room. But you can see, how we talk about how the research piece talks about how Norway is so weak. And again, this is our news and research room inside of our chat room. So if you want to get information like that, just be part of the Forex Analytics community. We got a research room. We got the general chat room. You could be running around, seeing everything that we're looking at. What Dale's looking at as far as the banking sector. You can go into the trades room and you can know that, I'm short the Aussie dollar at 64.52, so that price. All right, and I'm looking for a move to 64.40, so which already happened. But those things are in the Forex Analytics community, so make sure you take advantage of it. All right, now I explained all the stuff that's coming out next week. And remember, if there's anything that you see that you think could really move the market this next week, jump in the comments below. I might have missed something. Of course, it's Friday, and I have to say that my head's a little fried after this week's price action. It was a lot of volatility this week. But with that being said, Nick from Trading Analytics, he's going to give you his views on the market. So I'm going to pass you over to Nick, and when I come back, I'm going to actually take a look at the S&P. I'm going to take a good look at precious metals, and then I'm going to also take a look at crude oil, because crude oil is on the verge. And then I'm going to give you my top 3 trades of this week, and I'm going to review the top 3 trades from last week. All right, see you in a few minutes.
Hello everybody, my name is Nick Gross with Trading Analytics. Blake, thank you as always for passing on over to me. And what an eventful week, especially yesterday with what looked like a bull trap here. But I remember last week when we spoke, we really wanted to see a close below this channel that's been holding up since May. We finally got that and some follow through. Looks like a little bit of short covering. I'm filming before the open here on Friday, so we'll have to see how today actually plays out. But some key things that I want to point out. Fear and greed index is really low, very high extreme fear at 8. It's been quite some time since we've seen that. I want to say probably not since April of this year have we seen an 8 reading. And you're noticing the VIX also kind of picking up slightly. Hasn't gotten above 30 yet. I would like to see that. And, typically when you do get these readings down here, it does kind of infer the idea of, maybe I should start to think about getting long. I know that's scary right now, but I'd like to see a move above 30 in the VIX, see a bigger shakeout here in the S&P. I was trying to take a look at some stats regarding when those readings in the fear and greed are this low. What you'll notice that the 2-week has a pretty poor win ratio, so it could be some turbulence for the next few weeks. But I do ultimately feel as if, Wall Street is behind retail as far as percent gain this year, it looks like. So I think that what's likely to happen is we could continue to see some bleeding down towards, maybe just below 6,400, and then I think that the street comes in and buys us up and maybe takes us into an end of year rally. That would be my suspicion. I don't know if I'd necessarily be buying the S&P here, but we'll have to take a look at some other sectors. So let's talk about the NASDAQ. Tech has been a big conversation this week. One thing I will point out is, again, we got that close below the channel here. This one also dates back to May. Trying to hold way at this 38.2 that comes in at 24,255. Overall, though, I'd say support's going to be closer to 23,500. And yeah, it's still holding this little descending channel that it's been in since the end of October. A little bit of a false breakdown and a pop back above. Again, kind of looks like short covering going into the weekend here for now. If I were trading it intraday, I definitely want to see how we react at that 38.2 here. Also kind of signals where we broke down from. If we can get back above 24,445, we might be able to see, a sustained pop going into the end of week. But, a lot of people like to jump ship on Friday. Don't blame them. So we'll just have to see how today plays out. But let's go ahead and get into big tech really quick. Some key movements in Amazon was really interesting this past week. Just really bled out. On the week, Amazon's down 7.48%. You can see that up here when I'm not moving my cursor. And I'd say one of the big developments is that, it had this breakout, got above former all-time highs, and then had the false breakout. And, false breakouts do typically lead to breakdowns. So we'll have to see if that occurs. I definitely feel as if, range support in between 210 and 212 is going to be very key to hold for Amazon. We'll have to see if it can sustain that. I would honestly guess it probably comes down here, bounces a bit, and then we'll have to see if you get continuation. That would infer, the whole market getting that deeper correction, which we did not see this fall. So I'm not surprised that we're seeing some volatility. It kind of comes 'tis the season. It just came a little bit late this year. Another one that's concerning is Microsoft. Microsoft has been pretty stagnant ever since that epic run, the last earnings season, last earnings print in July. What a large spike that Microsoft had, and it kind of looks like a bit of a double top at the moment. Now, I will say we're back near, the former all-time highs in 2024, so this should hopefully stabilize Meta. But that double top does infer more weakness. I will also point out, though, that 38.2 comes in at 475. I think this is really good support for Microsoft. Now, we have to also talk about NVIDIA. Very important stock. Absolutely crushed earnings. And, one thing that's interesting about NVIDIA is it has all these eyeballs on it, and earnings are always a focal point. But what I would point out is that, and I generated this week, is that the one-day return in NVIDIA earnings tends to be the best with about a 56% win ratio. But the 1 month has a 33% win ratio. This is in the last 9 prints, and you can see out of the last 5, only one of the last 5 had a positive monthly outcome. So that has me a little bit skeptical, especially when broader tech looks like it's ready to roll over. NVIDIA is still holding up quite well. This 180 level is definitely key support. But I would say in the event it does get a larger pullback, I'd be looking for that 164 level, 165, these previous lows here. See if it can hold up. Yes, we're getting a pullback, but we still need to challenge these 38.2s, the continuation fibs, and I'm still remaining somewhat optimistic, and I'd like to lean in at some point soon, hopefully. But one place that I do want to lean into, as terrifying as it is actually crypto. We highlighted this very large weekly resistance trend line in Bitcoin. Wasn't expecting 3 tags on it, but we did get that, and now it's really bled out. And I'm looking for my price grab tool. I want to say, though, Bitcoin is down about 30% from the highs here. There it is. It's blended into my tickers. Bitcoin was down 36% from the highs. Now, that's a very large drop. Now, you also have, again, fear and greed at 8, very low reading. You have daily RSI oversold. You can see previous times it's not always the bottom, but it can sometimes pay off to get long down here. And on a weekly RSI, it's also getting close to oversold. So getting back to the 4-hour here, or I'm sorry, actually on the daily, I just want to point out that we did see a death cross. Now that printed over the weekend, and yeah, it definitely led to some bleeding out. Now you're going to see a lot of headlines about the death cross in Bitcoin. But one thing that I will point out is that the death cross, by the time it prints, and you start seeing it kind of show light, most of the move's already over. Again, already down over 30% from the highs here. You can see a good example of a death cross that had kind of already played out when you look at the S&P in the early spring. We got that death cross. By the time it crossed, the move was already over. And we were in the chat room talking about getting long. So, but I will say that this does come with caution. It is crypto, it's still a little bit of Wild West. I would like to see if this low here from April can hold. That comes in at 74,500. But overall, you saw the swipe of 100,000. Bled further out than we might have thought. Kind of similar thesis on the equities where I'm thinking, hey, Wall Street might want to buy a dip once it gets a better price. I think that there is a better price already in the cryptos here in Bitcoin and Ethereum. Ethereum got back below 3,000, down at 27.38, trying to hold a 618. We'll see if it can. But overall, I'm still feeling like there's a chance that we get a rally into the end of the year. So remaining optimistic. Cannot believe Thanksgiving is this Thursday. With that, I'll go ahead and pass it on back to Blake. Happy Thanksgiving to everybody as it comes up this week, and have a great week. Cheers.
Thanks, Nick. Your overviews on the markets are always great. I'm going to watch it once this video is completely edited because I didn't get a chance to watch it today. We usually film at the same times, but that's okay. It's okay if you get a little bit of a repeat on some of these things, but more importantly, it's getting a different viewpoint. And that's the thing about ForexAnalytix. When you're looking at ForexAnalytix and you're looking at the basic technical analysis, the harmonic analysis of an asset class, like in this case happens to be the sterling or an Elliott wave count, you're getting different points of view. And that's the real beauty of analysis, is being able to see what the rest of the market is looking at so you can come to your own conclusion about the markets. That's what trading is all about. And also being in our chat room and knowing exactly how I'm positioned, or some of our other traders or other analysts from ForexAnalytix are positioned in the markets. That's having that knowledge. That's what makes a great trader. Anyway, let's. Like I said, I want to cover a couple of things. I want to talk about the S&P because the S&P is so vulnerable. Now, the S&P is sold off, and we are finding support. This is the low from when President Trump announced 100% tariffs on China. And I was traveling when that happened. So the very next week, we rallied to new all-time highs. We just found some support at those lows today. Like I said, crypto continues to look very vulnerable, which also means that the S&P remains very vulnerable as well. So this level is the most important level to me as far as I'm concerned in the markets. That is a level that, if broken, is going to be very, very negative for the equity markets. So also you can see how we had this rising channel, how we're outside of the channel now. So I do expect sellers on rallies. We might see that as early as this next week. As the market reopens, we might see that Monday, Mutual Fund Monday, we like to call it, rally. And maybe Tuesday, you'll see some sellers into some resistance here. And if you have to just look where that could take us, I'll just zoom in a little bit. Here's a 4-hour chart. Let me get rid of this because obviously that didn't happen. We didn't rally to that resistance. I was thinking we might. But what we did is we broke through that triangle support and we found that triangle resistance and rejected it. So that resistance is super, super important. But what I would do is I would take this high right here to this low, and you'll probably see the 38% retracement. Let me get rid of this. These are, we're marking up those lows, right? So there's that previous pivot where, by the way, happened to be short the S&P right there. That's that 660, 6660 level that we talked about a whole week last week. It was the line in the sand, right? Well, guess what? We might get back and retest that early this next week. That line in the sand. Very important levels for the S&P. All right. I also, like I said, I want to talk a little bit about precious metals because gold, let's go over to gold really quick. Gold is in what I like to call a triangle right now. Let's get rid of this. We're gonna, don't worry, we're gonna cover some of this stuff real quick. All right, let me get rid of that. Let's do this. And if you want to see how I view gold right now, again, if you really want this information in real time as it's happening, you just go to ForexAnalytix, go over to gold, and go to my daily charts. You'll know exactly how I view gold. I update the daily charts every evening for the ForexAnalytix community throughout the course of the week. So what I'm showing you here is what I had drawn previously, but things change. You know, as I see new things, I redraw trend lines. I draw fib levels based on where markets have pivoted. When news hits the markets, I have to adjust the charts from time to time to adjust to that theme that may be happening in the market. Well, in gold, I believe we're in a consolidation. That doesn't necessarily mean it's bullish, even though we're in an uptrend. It could be what Greg Horvat would call a flat. Matter of fact, if you want to get Greg's analysis on gold, here's his Elliott wave count. And he says that, currently we're in a triangle as well, and alternate count could take us lower. So like I was just mentioning, gold not guaranteed to go up here. We could end up breaking lower first before moving higher or just breaking higher. But I think we are in a tight consolidation. I'm going to cover silver in a few minutes because that was one of our trades from last week. So don't worry about that. I also wanted to talk about crude oil. Crude oil is threatening a move towards these lows. Now, I've said this to you guys before, and I'm going to say it again. Crude oil, in order for it to break lower, in order for crude oil to trade below $55, we're going to have to start seeing some recessionary data, not only from the U.S., but globally. Are we there yet? I don't think so, at least not what we can tell. I mean, looking at PMIs today, if you wanted to just see where global PMIs are. I mean, Eurozone PMIs came in weaker than expected. Let's see, here's Friday. So you can see, here's the Eurozone PMIs. They are below 50, but, we have, France is still above 50 in their services. German services PMI is still above 50. Eurozone composite PMIs are still above 50, well above 50. You have the UK PMIs are still in expansionary territory. They may not be super strong, but still expansionary. See, and then you got US PMIs, right? You look at the US PMIs, we're still at 55, 54, 52. I mean, so still overall, we're not in recession type of data just yet. And I just was giving you a glimpse at PMIs, not talking about GDPs and some of our productivity and utilization numbers, none of that. I was just talking about PMIs just in general. But the point I'm trying to make here is if that and other data starts to turn south and we start to really feel that there is a risk that we're going to see a recession in the coming months, that's probably going to be the catalyst that drives crude oil below that $55 level. We're getting close. But these are also levels that we've seen the market bounce from time to time. So keep in mind, this is really important levels that we are testing, and I believe that crude oil will find some buyers around here unless the data starts to turn south. All right. What I wanted to do is I want to go over the top 3 trades from last week, and then I'm also going to review the top 3 trades from last week, and I'm going to give you 3 trades of this week. So let's get to it. This is the point that I know a lot of you guys wait for. So let's talk about last week. Last week we said sell the S&P at 68.20 to 68.40. Now the S&P did not, as I showed you earlier, we did not reach for those levels. I thought the S&P was going to reach up to here to get short. I thought we'd reach up here to get short. It didn't happen. The highest we got this week was 67.75. So unfortunately, trade setup number one, it didn't happen. It didn't come to fruition. Again, did a trade happen? And if it did it work for the next week? Yes or no? And if it didn't happen, it didn't happen. And we set up for trades. I look at the market all the time, and I'm like, if the market reaches this level, I'm going to take action. And sometimes the market just doesn't reach it. And that was this one time, this trade setup. We just didn't reach that level. So the first one, it's a break even, if you will. Trade setup number two, long dollar Canadian above 140.50 for new trend highs, target new trend highs. Well, today we broke above, actually the last couple of days, we broke above 140.50 and we almost hit new trend highs, but we're still positive. So if you bought it last week above 40.50 or early this week, we're trading at 140.94, so that one's a win. Now, have we hit new trend highs yet? We haven't, but still, you're positive. So one trade setup worked. One is a scratch. Third trade. Sell silver at $52, risk above the highs. Well, guess what? Silver hit 52.50, I think, maybe 40. Let me take a real quick look. 48, 50, 52.50 and change, right? And reversed hard. So I did that from last week, and that happened. Did we make it all the way down here? Not yet. Not yet. But we did reject. This is the 618 retracement, if you don't remember. So we hit the 618 retracement and previous support, which is this right here, and rolled over. So trade setup number three worked fabulously. So first trade, scratch. Second trade, we're good. Third trade, we're good. All right. 2 out of 3, not too bad. All right. So what are the three trade setups of this week? Well, before I get into that, like I said, the Trader Funding Program is having a sale. 30% off, instant funding. If you want to take advantage of these trades or the volatility that you're seeing, check out the Trader Funding Program. We have instant funding and one-step assessments. And our one-step assessments are really simple. All you have to do is you can't risk more than 6%, and you got to make 10% with an unlimited amount of time. As long as you're taking at least one trade a month to keep it going, you can take as long as you want. And you get involved in the ForexAnalytix community for a certain period of time so you can see what I'm trading, what other people are trading, how we're navigating through the markets. What a great deal. So if you want to get involved in the Trader Funding Program, we have a discount code. So sit back, listen to this 1-minute video on our Thanksgiving special. The holidays is a special time in the markets, and we at Trader Funding Program understand that. The reason why it's so special is because volatility is increasing, and the best way to take advantage of volatility is to be trading in the markets, but more importantly, trading somebody else's capital and not putting your own capital at risk. So at the Trader Funding Program, we recognize this, and we are going to give thanks to our traders. From November 20th till December 2nd, we're giving you 30% off any one of our assessments or our instant funding programs. You can get instantly funded up to $100,000 in capital, or you can get up to $1 million in our one-step assessment. So to learn more, make sure you check out traderfundingprogram.com for more information. But like I said, we want to give thanks to you by giving you 30% off. Use the discount code THANKS2025. And this way you can be involved in our community. Inside of the trader funding program, you'll also be included to the ForexAnalytix community for a certain period of time. And that is the best way to get funded. Being able to have access to traders like myself and other of the analysts at ForexAnalytix is the way to go. So make sure you check out Trader Funding Program. Remember, the discount code is THANKS2025, November 20th through December 2nd. Have a great day, and I'll see you in the chat rooms. All right, thanks for sitting through that video. And like I said, by the way, this week and last week, we have had a lot of people withdraw money out of their funding accounts, which is amazing. That means it's working as intended for a lot of people. If you're utilizing the funding accounts to trade, other people's money, so you don't have to risk your own money, and then you get to pull money out of it, that means it's doing what we had wanted. So check out the Trader Funding Program and take advantage of this sale till December 2nd. So you have another week and a half. All right, what are the 3 trade setups of this week? So this week, short the S&P below the October 10th lows, which would be these lows right here, because if we break down, it should be a pretty quick move to the 127% extension, which is just below 6,400. You can see it right there. So this should be what I like to call it a trap door in the market. When you get you hit a certain level or you break a certain level, it triggers a lot of sell orders. And in this case, that would be the case. Look, people are even talking to me right now as we speak. You can actually go and have conversations with me right here. And you can see those conversations are happening right now. If you're wondering what the beep noise is, that's what it is. All right. So anyway, trade setup number 1, a break of that support is going to be bearish for the S&P. Target 63.86, which would be just above the 127% extension. Trade setup number 1. Trade setup number 2. Short the euro dollar below 114.65, because if we break below 114.65, we're going to get a range extension that will eventually target a move into the 112s. And that also, you have to realize, is coinciding with it would be coinciding with a big breakout of the dollar index. Trade setup number 3. Short the Aussie below 64.15. 64.15 being this level right here. Sorry, let me just go ahead and do that. Break below 64.15, and you're going to target 50% retracement, which would be right here, to about 63.15, which I said near 63 cents. So I believe that if the Aussie breaks, it's going to really break. And it's been a very tight consolidation. So when you're in a tight consolidation for so long, like the Aussie has been, when you break, the breakouts tend to be fairly aggressive. So think about this range, how tight it's been. I mean, the Aussie dollar has not done a lot this year, and it's been a very, very tight consolidation. So when we break, the break tends to be very aggressive. All right, guys and gals, I hope you enjoy these week ahead videos. If you do, please give me a thumbs up. Please give the team a thumbs up. Comment down below if there's anything that you're looking at, or maybe there's something you want me to take a look at. Please comment down below. I didn't look at yields. I didn't look at copper. But if there's an asset that you want to see, jump in the comments below and let me know. And I'm really excited this weekend. I've got my son, my youngest, coming home from college for the holidays. So I'm super excited to have him home. I hope you guys are all going to have a great weekend as well. And I want to thank you for spending your time with me. I know this is your personal time. You're watching this probably on a Saturday or a Sunday. And I know your personal time is valuable. So thank you. I appreciate it that you spend that time with me. So subscribe to the channel, jump down in the comments, thumbs up. You can do all that. It's very free to do. So you can do all three of those things and wouldn't cost you a dime. So subscribe to this channel. Guys, I'll see you on the Morning Edge on Monday morning. Thanks so much. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.